Hey guys, Evans here. So today we will analyze one of the most important topics in trading, which is entry strategies that professionals actually use. So most beginners open trades randomly just off feeling. They see a candle and press a button. In quick trading, this is a critical mistake. A professional never enters just like that. They always have logic, they script, an entry point, a cancellation level, structure, and charts. So today I will show you several strategies that work in any market. And the main thing is that they don't require complex indicators. It's enough to learn to read price movements and understand how to interpret these strategies and see which one to use in your chosen currency pair. That is, we start from the chart and begin to better understand the market situation. The strategies I want to discuss are breakout, level break, pullback, which is a correction after a breakout, and liquidity test, when the price stops and then reverses. So of course, in each section, I will show you which tools we specifically use so you can understand the mechanics of the platform. But before we begin, I will explain as simply as possible. An entry strategy is a specific moment in time when the probability of movement in the desired direction is higher than usual. So it's not a signal or indicator, but exactly the moment when the price shows its intention to continue moving. These three strategies are the most reliable and universal, and today we will discuss each of them in detail. So the first strategy is breakout, which occurs when the price persistently pushes at level resistance from above or support from below, and at some point it makes a sharp breakout. How do we recognize a breakout? The price touches the level several times, the candles become larger, volumes and volatility increases, and an impulse appears. So as you can see here, a breakout occurred, meaning a long candle and a sharp upward jump. To clarify, here the candles were slightly above the level and then such a jump happens, which is called a breakout. So we judge based on the candles, their behavior, how they follow each other, and how much they grow. This indicates momentum. Accordingly, we understand the moment to enter. If the resistance is broken upward, we buy. If the support is broken downward, we sell immediately after the breakout candle. Thus here, for example, we could have entered a sell after a downward break and earned money during this period. It's actually very straightforward, just following the trend direction and understanding the candles. If, for instance, the price hits the upper threshold several times, here appears as a large green candle, that's a breakout. I open a trade in the direction of the impulse, upward in the case of a breakout. Now I'll just pick another currency pair. I'll even show you on an example. Let's take Euro Canadian dollar. So following the breakout strategy, what do we see? There was a downward breakout, right? A sharp candle. Now there's an upward trend. Let's choose the 1 minute time frame. And open a buy. So let's see in a different perspective. Again, don't forget our time frames. You can see long wicks and the trend is upward. Now there's a small candle downward, but based on the behavior that as we see, there's a breakout here and the situation has gone up. It touched the bottom several times. An important point when we can open a trade using this strategy. So open the trade. It's crucial to understand candle behavior. So again, let's look at different time frames. Don't just focus on one. As a reminder, the hourly chart shows the overall picture, while the minute chart shows the overall picture and various impulses. And of course, the second time frame shows just impulses. So breakout is candle behavior, okay? So a large candle appears, this is a breakout, and accordingly we can place trades in the direction of the trend. This is a classic situation for working with breakouts. Right now we have 15 seconds before our order closes. It all may sound complicated in terminology, but in fact we're simply observing the behavior of several candles that happened before. We look at levels, how the level is broken, and understand the trend direction. Great. We earned profit. Let's go. So now let's move on to the second currency pair and our second strategy. Let it be euro and pound. And the second strategy is called pullback or level retest. So very often after a breakout, the price returns back as if checking whether the level has truly been broken, or only then it starts moving in the desired direction. So how do we recognize a pullback? There was a breakout, the price then returned to the level held, and a reversal candle appeared. This is an ideal entry point. That is, if it broke upward, we wait for a pullback and open a buy. If it broke downward, we wait for the pullback and open a sell. Basically, it's about a downward breakout within a 1 minute time frame. So what should we do here? We need to wait until there is a candle indicating a rise, which is noticeably larger than the previous one, or at least the same size as the downside one. So simply put, we look for a candle in the opposite direction, and then we can open a trade on the 1 minute chart. For example, it's not recommended to open a buy or sell right now because based on the pullback strategy, the market can in fact reverse in either direction. It can either continue to go downward or suddenly go up. So not recommended right now. Let's see, for an example, another pair. Besides understanding when to enter, this helps us to see on the chart when not to enter. We don't want to act randomly, and this chart shows that based on the pullback strategy, now is not a good time to open trades either up or down. This is sort of a shot in the dark, which is unnecessary. So we're not going after that. Let's select another currency pair. Yeah, the situation is more interesting here. Again, see how there was a buy signal earlier, and here's an example of a pullback candle. It looked like it was heading downward, quite a long candle, by the way, which might have tempted a beginner to think to sell further down. But now we know about the pullback strategy. The price returned to the level, held it, a reverse candle appeared, and now it's moving in the trend's direction, so we can consider opening a buy. Let's do it right now. And again, we will wait. We shouldn't focus on immediate action because some of misleading signals or inexperience, one might think to go further down. But with the pullback strategy, we act differently now. So follow the trend after the candle has broken the level downward and the retracement confirms a reversal, okay? This is actually a very, very crucial point, the timing of entry. Pay attention to it, analyze, and of course, it's better to have a few successful entries than to lose your deposit and over like 10 bad moves, okay? Our goal here is not to lose our deposit. We're not in a race to see who loses faster, okay? We are here to earn steadily And as you can see, everything works. We got profit again. For example, now looking at the pullback moment, the overall trend is upward, and then there's a sharp downward candle, and after that, the trend continues upward. One of the successful entry points was here, and we entered there. So it's essential to understand this to make our trade successful. So moving on to the third strategy, it's called liquidity testing. I want to say that this is one of the most advanced strategies. The idea is that large players often take out the stop loss orders of traders. The price creates a false breakout and then sharply reverses. How do we recognize this? The price approaches a level, makes a quick spike beyond the level, and then returns back inside the range. The next candle moves respectively in the opposite direction. When should we open a trade based on this strategy? So if the price spikes below the level, we go upward. If it spikes above the level, we go downward. So essentially trade in the direction of the reversal, not the breakout. Sorry. For example, let's take a pair. So you see there was a breakout here and then it started to reverse. So based on the liquidity test, players understand that stops are being triggered here and the reversal is going in the other direction. So there's a shadow, a long shadow on the bottom, which triggers stops and closes above a level within the range. This is the liquidity test. So again, understanding the length of the candles, you can see the candle tails here. So based on this, there's a moment where there are 3 candles in a row with long tails, and this is the moment that tells us we need to reverse the trend. Okay, so let's open. So the liquidity test allows us to understand where players are placing stops. Again, a long candle down and a trend reversal. A long candle would have been up and the reversal would be down. So this is called a false breakout. When the candle doesn't move further in the direction of its movement, but instead moves in the opposite direction. And now we understand this based on the behavior of the previous candles, which were leading up to the false breakout. So it's important to understand these points. It's not always about following the trend, but understanding how to spot false breakouts, long shadows, long tails, and the behavior of previous candles, and then reversal. Let's look at our general time frame, the hour time frame. As you can see, we have a profitable trade again, but here, for example, you see that it's already broken through the previous bottom and it's about to reverse. It's important to understand these points and not to follow the direction of this candle, but rather reverse. Yeah, so this is what the liquidity test shows us, okay? So to summarize, these 3 strategies are the foundation used by 90% of professionals. Breakout, when the market breaks the structure. Pullback, when the market returns to test a level. Liquidity testing, when the market gets rid of other traders before reversing. So mastering these will elevate your trading above most beginners. We will revisit each strategy in more detail in upcoming videos. For now, I wanted to give you an overview of how they work based on the chart. In future videos, we will combine chart analysis, indicators, and choose the best strategy accordingly. I hope this video was helpful. I'm glad to see you all in these videos. Our goal is to earn steadily over the long run. So I wish you success in trading. Feel free to ask questions. I'm always here and I'm always happy to help. Bye-bye, guys.